Hey everyone, welcome. I am super excited to guide you through this explainer today. We're going to completely unpack the financial blueprints of an absolute titan in the aerospace and defense sector, Northrop Grumman. We've got a really fascinating array of fresh data from their first quarter of 2026, alongside some full year 2025 results and historical metrics. Look, if you love seeing how massive, complex organizations engineer their financial growth and stability, you are definitely in the right place. We're going to stick strictly to the data to see exactly how this defense giant is navigating today's unprecedented global security environment.
All right, to make sure we get the absolute most out of these dense earnings reports, here is our roadmap for today. 1. The big picture. 2. Revenue by segment. 3. That massive $95 billion backlog. 4. Earnings and cash flow. 5. A history of dividends. And finally, number 6, the 2026 outlook. Let's dive right in.
Starting off with Section 1, the big picture, scale and demand.
I want to kick things off by framing our analysis with this quote directly from CEO Kathy Warden regarding their Q1 2026 results. She says, Northrop Grumman delivered strong first-quarter results, underscoring our ability to deliver in today's unprecedented global demand environment. This isn't just standard corporate speak. It's actually the fundamental thesis of their current performance. The financial numbers we're about to look at are a direct, measurable reflection of current global security needs and the company's sheer manufacturing capacity to meet them at scale.
And here is exactly what that unprecedented demand looks like in hard dollars. $9.9 billion. That is Northrop Grumman's total sales figure for just the first quarter of 2026 alone. What you really need to take away from this is the trajectory. This represents a super solid 4% increase from the $9.5 billion they reported in the first quarter of 2025. I mean, think about it. When you're operating at almost $10 billion a quarter, a 4% top-line increase represents literally hundreds of millions of dollars in brand new, realized revenue just flowing through the enterprise.
Moving on to Section 2, Revenue by Segment, looking under the hood.
So, breaking down the top 3 segments for Q1 2026, Mission Systems brought in $2.86 billion and Space Systems generated $2.48 billion. But the real standout here, that would be Aeronautics Systems, which hit $3.28 billion for the quarter. Guys, that's a massive 17% growth compared to the first quarter of last year, heavily driven by strong demand for their global aircraft capabilities. When a single segment surges by 17%, it completely shifts the overall momentum of the entire company.
Now let's just zoom out for a second to the full year 2025 data, just to see how this balancing act works over a longer timeline. You can see how these 4 distinct segments balance out to create a nearly $42 billion annual revenue engine. Aeronautics and Mission Systems are basically neck and neck at $13 billion and $12.5 billion. Space Systems definitely pulls its weight at nearly $11 billion, and Defense Systems rounds the whole thing out at a highly respectable $8 billion. This really highlights the sheer strength of a diversified portfolio. If one segment faces headwinds, like Space Systems actually did in 2025 as some restricted programs wound down, the robust performance in Mission and Defense Systems just steps in and keeps the overall company on a growth trajectory.
Section 3, the $95 billion backlog and future stability.
Okay, just let the sheer size of this number sink in for a second. $95.6 billion? That is Northrop Grumman's total backlog as of the end of the first quarter of 2026. This means the company has nearly 2.5 times its annual revenue already locked up in the pipeline. It provides just incredible long-term visibility. For anyone trying to understand the long-term viability of this enterprise, this $95.6 billion figure is your absolute bedrock. It effectively insulates the company from short-term macroeconomic shocks simply because the work is already on the books.
But we do need to be precise about what this actually means, because the backlog is split into 2 really critical categories. The funded backlog sits at $44.06 billion. This represents firm orders where the funding is officially authorized and appropriated by the government. Basically, the check is effectively written. Then you have the unfunded backlog at $51.54 billion. These are firm orders and contracts they've already won, but Congress or the customer just hasn't officially appropriated the specific budget for that year yet. So the crucial point here is that while both represent highly probable future revenue, the funded portion is the immediate tangible runway.
All right, Section 4, Earnings and Cash Flow, the bottom line.
When we look at profitability, the jump in diluted earnings per share, which is a key metric of profit divided by outstanding shares, is just vital. It went from $3.32 in Q1 of 2025 all the way to $6.14 in Q1 of 2026. That is an absolutely astonishing 85% increase. But as focused learners, we don't just stare at the raw percentage, we want to know the why. A significant chunk of this favorable comparison is actually because Q1 2025 included a heavy $2.74 adjustment related to the B-21 program. But here's the thing. Even factoring that out, strong core segment performance still drove an organic increase in EPS. It proves that the underlying machinery of the business is highly, highly profitable. And just to prove this wasn't a one-quarter anomaly, let's compare these two full-year 2025 metrics. In 2025, Northrop Grumman posted a diluted EPS of $29.08, which is great, but paper earnings are one thing, cash is reality. Right alongside that EPS, they generated a massive $3.3 billion in free cash flow. This proves the company isn't just relying on clever accounting to generate paper earnings. They are genuinely throwing off billions of dollars in real, unencumbered cash that they can use to invest, pay down debt, or, of course, reward their shareholders.
Which brings us to Section 5, a history of dividends and shareholder returns.
I absolutely love a good historical data set, and this timeline is honestly a masterpiece of financial consistency. Walk through this with me. Back in 1990, the quarterly dividend was 14 cents. By 2000, it was 18 cents. By 2010, it had more than doubled to 43 cents. Fast forward to 2020, it exploded to $1.45. And now, in 2026, it sits at $2.47. Just look at that steady, unbroken, decades-long climb in quarterly dividend payouts. Through economic booms, dot-com busts, financial crises, and global pandemics, this defense contractor has consistently raised the cash it hands back to shareholders. It's really something.
Let's just highlight this specific number to cement where this long-term growth trend currently stands today. $2.47 is the latest declared quarterly dividend for June 2026. And look, this isn't an accident. Hitting this number requires meticulous long-term capital allocation, strong operational margins, and an executive team that is entirely committed to generating shareholder value over decades, not just quarters.
And finally, Section 6, the 2026 outlook and what lies ahead.
Looking at the reaffirmed 2026 guidance, the company is projecting a sales range between $43.5 billion and $44 billion for the year. This points to expected mid-single-digit sales growth right across the enterprise. Crucially, they're also projecting free cash flow between $3.1 billion and $3.5 billion. So the big takeaway here is that they expect that strong cash generation engine we saw in 2025 to just keep humming right along, completely uninterrupted, straight through 2026.
And here is exactly how they expect to achieve that $44 billion target broken down by segment. Aeronautics is projected in the mid-13 billion range. Mission Systems in the high 12 billion. Space Systems is holding steady at roughly 11 billion, and Defense Systems is projected in the mid to high 8 billion range. This points to a really healthy, broad-based growth across the entire portfolio. They aren't just relying on one star player to carry the team. Every single segment is forecasted to pull its own massive weight.
Which brings us to the ultimate unknown, and the question I want to leave you with today. We've seen the blueprint, we've analyzed the backlog, and we've reviewed the 2026 guidance. But obviously, these numbers don't exist in a vacuum. How will shifting global security trends, sudden geopolitical events, and potentially unpredictable government budget priorities impact these very precise projections in the quarters to come? The financial blueprint is incredibly strong, for sure, but it's the real-world execution that will truly define what's possible for Northrop Grumman moving forward. Thank you so much for joining me on this deep dive. Keep learning, keep analyzing, and I will catch you in the next explainer.